It's about to get crazy. Yes, it's true. Hey, everybody, you're watching Bull, Boom, Bear Bust. My name is JJ. It is Tuesday, April 19th, 2022. A lot of financial, economic news to get into today, and we're seeing more signs of a cooling economy. And there's some GSEs out there predicting what's going to be happening with the economy and warning what's going to be happening with the economy. We're going to talk about that and more. Let's get started right here with Netflix. For the first time in more than 10 years, Netflix loses subscribers. First quarter 2022, Netflix sheds 200,000 subscribers. Now, why is this important? Well, it shows you that more Americans now are feeling this financial pinch and they're choosing to go without non-necessities and things like entertainment. And the stock plunged 25%. So more and more people now are having to decide between putting their gas in their vehicles or watching some movies on this app. More people are deciding, am I going to eat 3 meals a day or am I going to cut back and still continue to watch Netflix? And this is just the beginning. I think a lot of entertainment and a lot of companies that are just providing a service that people can cancel at the click of a button, they're going to be seeing some big hits going down the road here. And if we look back the past 10, 12 years, we know that Netflix was one of the best performing stocks, up about tenfold. Actually, I believe it was in about the $3-something range in 2008 when I first started tracking this stock. And let's go ahead and just take a look here. This is kind of a coulda, woulda, shoulda moment. Coulda, shoulda, woulda. 2008 stock, $3.29 at the beginning or at the end of 2007. You could have made 10 times your money and even more if you would have sold close to the peak, which was, let's see here, wow, almost $700. So you could have made about 20 times your money. That beat the housing market, that beat all indexes, that beat a lot of things. That beat gold, that beat silver. So coulda, shoulda, woulda, but Netflix now taking a huge drop here lately, down below 350 as of the recent close. Folks, please let me know what you think down in the comments, but I think this is a sign that people are really starting to feel the pinch, and the second half of this year, you're going to really start seeing some major things go down with the economy. It doesn't mean that prices are going down. It just means that people are really going to have to shift their spending patterns with all the rising prices that we're seeing everywhere you look. Even GSE, Fannie Mae, is out there predicting a recession in 2023. You would think that Fannie Mae would know what's about to happen. But I actually don't think it's going to be a recession. I think it's going to be an inflationary depression, right? Unless somebody pulls the plug on the money creation, we're looking at an inflationary depression, not just a recession. Recessions only happen when GDP drops for 2 consecutive quarters. Well, I don't think they're going to let that happen. I think they're still going to pump enough money out to the people that people will keep spending. And just the fact that prices are higher is going to make GDP look good enough to avoid a recession on paper. But when you look at the real world, when you look at people's wallets and how much extra money they have to spend, I think you're going to see that it's going to be an inflationary depression. All right, let's transition a little bit here, but still on the topic of the rising cost of living. Rising prices are not just about shortages and money printing. We know that those are 2 major components, but there's a lot more than just those 2 factors. There's a lot more than meets the eye. Let's take a look at this article here out of CBS. And we talked about this off and on over the years. Companies are using inflation to hike prices and generate huge profits. So at the same time, we're seeing rising costs. Yes, these costs do get passed along to the consumer because wholesale prices are higher. That means businesses are also paying higher prices for raw materials and goods. and that ultimately comes back to the consumer. But we're seeing companies use this as an excuse to raise prices even more than what they really need to because of inflation. And that's why you continue to see these profits set records here. Companies using inflation to hike prices and generate huge profits. Let's take a look here out of this article. Some of the nation's largest retailers have been using soaring inflation rates as an excuse to raise prices and rake in billions of dollars in additional profit, a corporate watchdog group charged on Friday. And the following was put out by Robert Reich. He says, quote, meat prices increased by double digits. Tyson CEO says they're asking customers to, quote, pay for inflation. Meanwhile, Tyson posted a $1 billion profit last quarter, a 48% increase from the first quarter of 2021. Don't be fooled. This is about corporate greed. It always is. You see, the more power, the more leverage a big company gets, the more they're going to raise prices. The more the elimination of the competitors happens, and we saw this especially in the last couple of years, with so many small businesses having to close doors, the mega corporations, the giants, the monopolies, got even more powerful, and now they're going to use that leverage to raise prices even faster, and they're going to use the excuse of inflation and rising costs, and they're going to put that out to the consumers. And so when you call and ask why your insurance bill went up 20% over the past year, well, they're going to say inflation. Of course, that's part of it, but they're adding on much more on top of the rising costs and the rising wholesale prices. And you don't have to look too far. Just one example, one of many examples, is Tyson with that $1 billion in profit in one quarter, a 48% increase. Pretty sickening, folks. Now, in our previous report, we talked about how the Fed, they're continuing to buy securities, even though a few months ago they told us they were going to be done by March. Well, here we are almost at the end of April, and they're still buying securities. Now, they're not buying as much, so there's still some things happening that are leading me to believe we're going to see some big financial shocks as we continue into 2022. A big spike in mortgage rates, one of the biggest increases we've ever seen. Now, they're still low historically, but the rate of increase here in a short amount of time is setting records. So it looks like they're trying to steer this thing into a soft landing. We see the 10-year yield continues to rise here. And today we're up at about 2.91. So the Fed is taking more of a hands-off approach, not completely hands-off, but they're definitely letting some things happen here and letting rates rise. They're not stopping their purchases of securities, but there's a bit of a slowdown. And with the amounts of debt out there, they're being very, very cautious and moving very, very slowly, because we've never seen these levels of debt at the same time as having rising rates. Will investors come in and buy up all the goodies, all the homes, all the stocks, if and when there is a price correction or a decline? We'll have to see. To me, that's what it looks like. The wealth transfer is about ready to get real this year. At the end of 2022, I think we're going to see some things happen. Lots of things happening already, but hold on to your seatbelts, folks. It's going to get a lot crazier. Continue to prepare, keep stacking. Hopefully see you down in the comments. Let me know what you think about all this. And please make sure that you are subscribed if you like these reports. And help us stay alive out here. And thanks everybody for watching. Peace.